If you ever thought trading is somewhat like gambling because you never know where the market might go, this means that you don't have a mechanical entry model with which you can go ahead and determine what's the market's next potential move. In today's video, I'll be breaking down my exact step-by-step strategy that lets me get consistent payouts like this, and this. Now you guys have all seen me trade live in front of you guys, whether it's on TikTok or YouTube or on Discord, but you guys have pretty much wondered the exact same thing. How do you know where the next move is going to happen? And in this video, I'm going to be explaining exactly that. So let's get straight into it. Now what I trade is the strat, which is also known as the CRT, candle range theory. What it pretty much talks about is directional moves and failed directional moves, and I'll be breaking down exactly just that today in this video. Alright, now before we explain anything in detail, we need to understand the simple lifespans of a candlestick. So for a bullish candle, we have the open, which is right over here. The candle will next create a low, which is the bottom wick. That is the low. After that, it reverses, pushing up all the way to create the high. After it creates the high, we come back down and fully close. These are the four lifespans of a candlestick. Now in a bearish scenario, we have the open and then it creates a high. So in a bullish scenario, it opens, it creates a low. In a bearish, it opens, creates a high right away, then pushes down to create the low and then closes. These are the four lifespans of a candlestick, and every single candle has to go through exactly just that. Now you might be wondering, what the fuck is that supposed to help me with? Well, I'll explain that straight to you right now, because without understanding this, you won't understand the next concept. And here's what this goes into hand. Now we have a scenario right over here where we call it a 2-2 continuation. What does that mean? A candle that is pretty much on the previous right here. This is the previous candle right now, and this is the current candle. What we notice is right now we have this candle being a green bullish candle, and then the next candle is what we call a 2-up. The reason why we call it a 2-up is because it broke the previous candle's highs, but not the lows. So if you notice, it did not come back down and create this, break this low, and at the same time push back up and breaks this high. It broke only one side. It broke only one side of the previous candle, which is right over here, this high. It only broke this high, did not break the low. So that tells us that this candle is a 2-up. It is a directional move where price is trending to the top side. And again, this will come into handy right here where you guys can understand exactly what's going to happen next. Now, if we obviously see that and we see that price is very bullish and green, we know where the market is likely to go next, which is continuing that buying pressure. If we see a bunch of buyers stepping in and a lot of buying pressure came in, bought price up, we are more likely to continue that direction. But say we encounter something like this, where the candle goes ahead and buys all the way up and then it comes right back down and closes in the previous candle's range. So it is still what we call a 2-up. In this scenario, we still call this a 2-up. We do not change the name of it. It does not change. The whole function of it is that still buying pressure was still aggressive. They tried to continue buying up, and instead what happened was they failed. Now you might be wondering, what do you mean by that? They failed. Okay, so think about it like this. Say we had $50,000 worth of orders inside this candlestick right here, right? We had a bunch of buyers step in and try to bring price up higher. Now, in this scenario where price is over here in the next candle, we need even more aggressive buying for us to go up even higher. Again, we would need maybe at least $100,000 worth of orders for us to continue buying up higher. And I'm just giving numbers out, right? I'm just throwing numbers out there. But say we had that $100,000 worth of orders, and then right after that, immediately, we had a $150,000 worth of orders that came in that just sold right away. All of them are just sellers, aggressive selling. Guess what's going to happen? Price will continue pushing up right away, getting all these orders in, and then reversing and closing inside the previous candle's range, which tells us that now buyers are no longer in control and sellers are now stepping back up, and which makes this a failed 2-up. So what's a failed 2-up? It's when a candle breaks one side but fails the other side. So when it fails to the top side but does not obviously close above the previous candle's range or closes off red, that tells us that is a failed 2-up. And this tells us that pretty much buyers are now weak and sellers are looking to be in control, and this is what we call V-shape. We could also consider this as a V-shape. If you look on the line chart, you will normally see something like this where price is like trending up and then right away it does this, which tells us that now sellers are being brought back in, and this is right here where the body will be formed. This candle right here, this is the body, this is the little tiny wick which is right there, and then this is the whole big wick that we had. This is personally one of my favorite setups to take, which tells us that the next candle is likely to be something like this. The next candle will more than likely be like a candle that opens up right here over here, for example, pushes out to create the high, then immediately starts retracing back down lower to create a low. When it creates that low, it comes back up a little bit, gives us a little bit of pullback, and then it closes. And I'll show you guys examples of just that right now. But what this would tell us that we have a 2-up right over here. So this is going to be called a 2-up, then a failed 2-up, so F2U. And then right after that, it's going to be a 2 down, which is a candle that breaks to the downside but does not break the previous candle's highs. That is in simple format. Now this right here is a perfect example of exactly what I just broke down, which is a candle that breaks to the top side but not the previous candle right now. So we have this candle where it broke the previous candle's highs but failed to go ahead and close above. What is likely to happen next? We have this as our entry right here. So we will now look at entry models when price breaks that low. That's why you always see me on live stream drawing out the lows and the highs of the previous candle. That's why it's very important for me, because the break is the confirmation for an entry into a short or a long. What we have identified is obviously a candle that is very bullish, followed by a candle that tried to push up but failed and instead closed in the previous candle's range. Now we can go down to lower time frame, like for example the 1 minute time frame, and look for an entry model when the next 4 hour opens up, which is just right about now. What we see is, okay, well, price is pushing up. We are just interested in that pullback. If price continues pushing up all the way up to here, then that invalidates the setup, which makes it, this candle right here would be breaking a 4 hour to up. So if it breaks this high right over here, this is why I always draw the candles lows and highs. So if it breaks the top side, we are no longer interested in a trade for us to push lower, because all these selling that came in was just brought right back up. But instead, if we see that the candle pushes down to break these lows, then that tells us that sellers are now in control. We could hop on that wave. Now that I went ahead and drew out pretty much the below of the candle and the top of the candle, now we go ahead and drop down to a lower time frame. And what we want to see is we want to see how price reacts inside this range. If price breaks it to the top side, it's simple. Don't trade. If price breaks it to the downside, it's simple. You take the entry for a move down. All right, and now you guys see obviously right over here, we have broken to the downside. We had a very good close. What we can do now is go ahead and place our entries. Obviously, I'm on TradingView's replay feature, so I'm not going to be able to go ahead and place it the right way, obviously, because it's going to be a little bit delayed. But we'll go ahead and set our entry, go ahead and put our take profit, for example, at a 1 to 2 RR. And then what we'll do is I'll click trade. I'll go ahead and sell. Put our sell right over here, put our stops right above this high, so risking about $2,000 to make back $4,000 or $5,000 or whatever the case might be, whatever RR you prefer, right? So again, for me personally, I like to usually just go for 1 to 2 RRs, but you can go for even higher and more RR multiple if you really wanted to. It's just preference at the end of the day. Whatever you prefer to use, you can use. Now for our stop loss placement, obviously I forgot to explain that really well, but what we're going to do is we're going to put it above the 4 hour candle wick. So whatever wick that we have formed out, whatever high that we made out, that's where our stop loss will be, because if price continues going higher, we want to be out immediately. And if price continues going lower, we want to be in that trade for as long as possible. So what you'll see right now is obviously price started trading up. And if it wants to take us out, because again, our stop loss is right above that wick that we just formed out. If it wants to stop us out, that is completely fine. We are not in a rush of a trade. We are trying to hop on the trend and the direction. All right, so now we got stopped out on the first one, but we see that there's obviously still weakness. And again, if we have not broken this high, this does not invalidate our setup. If we have not broken this low, we have still not invalidated our setup. All we have to do is right now is just wait. It either breaks this high, which invalidates our setup and tells us that, hey, we are no longer interested in selling. And then, for example, if it breaks this low, then it tells us we are interested in selling. We just have to wait for it and see exactly what it wants to do. Now, right over here, again, it broke it. What we go ahead and do is place our entries. Now our stops will be a lot wider because it created this as a top wick. And this is the last bullish move we had. And then we could target that 1 to 2 or whatever the case might be. So I'll still risk the exact same amount, which is going to be 10 contracts. Sell, place our stops above at this high, or above this high, sorry. And then target a 1 to 2 RR multiple, which is all the way down to these lows. And we could see how the trade played out perfectly, giving us a solid 1 to 2 RR. Even though we took a little loss in the beginning, we want to hop out of the trade immediately. I'm not here to give you guys false info or give you guys some just cherry pick trades. I'm giving you guys the reality that you will get stopped out, and as long as you manage trades, you should be completely fine. Again, losses are inevitable in trading. You're always going to face those losses, but what you care about the most, and you should care about the most as a trader, is managing the losses as much as possible and letting your plays win as much as possible. So in my scenario, this is perfectly of a trade. Honestly, I would take this any day of the week, even though we got stopped on the first position on our first entry. Again, our goal is if price created that wick and then we are failing that wick, we are no longer coming up to that wick, that's a high that should never be retraced into. We should hit our TP with no issues. And if it does, we want to be out immediately. We do not want to be holding off of hopes and prayers. We do not want to be holding in case the trade, oh, maybe it will reverse, maybe it will change direction, maybe it will finally push my way. Nope. The moment it hits that wick, we want to be out. And if it continues going in our favor, good. So you can see this trade potentially could play out for longer and longer, and more RR actually played out all the way for a 1 to 3 RR multiple. And now guys, here's an example of this exact same setup, but in a reverse way, in a bullish scenario, where we'll see the pretty much 2 down, fail 2 down, 2 up scenario. In this sense, basically what we want to see is a candle that pushes to the downside, followed by a candle that pushes to the downside, which is right here, but fails and closes above in the previous candle's range. This basically tells us that buyers are now stepping up and they're now in control instead of sellers being in control. What we want to see is the next candle pretty much open up, create the bottom wick, push back up, breaking at 2 up. Once it breaks that 2 up, that is our signal for an entry into a long, with our stop loss being at that wick level. In this scenario, I'll go ahead and keep it where it's on the 4-hour time frame. That way you guys can go ahead and see exactly how this works. We'll keep it just on the 4-hour time frame, and that way you guys can just see exactly how the candle is moving. All right, so now we see, obviously, we still have not broken to the top side. We're still trending right now, where the candle, we're not interested in buying or selling yet. If it breaks this candle to the downside, then this invalidates our setup. If it breaks it to the top side, we know that this is where we want to enter in, and we want to go ahead and take our targets, put our stop losses before that wick or below that wick. So we'll just wait for now. Still no entries for us. All right, and now you guys can see, obviously, we have broken that high. We pushed up, broke out of this range. So now this gives us the valid entry for a long, with our stop loss being right below. This is obviously the 4-hour time frame, so this is going to be taking a fat minute for us, but you could use this across all the different time frames, whatever time frame you guys obviously prefer to use. Feel free to use it for however you feel. You could use it on the 15-minute. I personally go with the hourly, 4-hour, and 30-minute time frame, but we'll go ahead and take 10 contracts, or let's do 2 contracts because this is actually a mini, not a micro. Put our stops right at the lows and then target, for example, the opposing highs at these highs or all the way up here, or a fixed RR. Personally, I like to go for 1 to 2 RR multiples just because it keeps it simple for me and it makes things a lot easier. So again, our stop loss is just at this low. If candle breaks to the downside right here, then that tells us that our position is no longer valid and we want to be out. If it keeps going up, we want to stay in this for as long as possible. Obviously, right now, you guys can obviously see that we started pushing up. What we can do to manage the trade the best way possible is move our stops to this candle's new low, which is the new low that we made that causes this candle to break to the top side. So this candle was now broken to the top side, confirming that buyers are in control. And this tells us that we can move our stops to this candle's low right here. Then you have the next candle right after that, which broke again to the top side. So it broke this candle's high right over here. It has created the bottom wick, which tells us that now we could move our stops to this candle's low. And that tells us that now we could actually hold on to this trade for as long as we wanted to, even potentially pass or take profits by just trailing our stops higher and higher and higher and higher until it eventually does that. Now, when it kicks us out, we secured our position, we caught us our dubs. And if you want to hold on to the position, you could obviously hold for higher RR and let the trade play out for as long as possible. Now, I figured I would give you guys an hourly example of how this works. This is on the hourly time frame, and pretty much we are looking for the exact same thing. This is in a bearish scenario where the candle pretty much broke to the top side right over here. So this tells us that buyers are in control. I just messed up. I don't know what I did there. But buyers are not in control, leaving this huge wick. Sometimes you'll see the candle does not close inside the previous candle, but still shows you a lot of weakness because look at how big this wick is. It tells us that sellers are now in control and we want to see the next candle break to the downside, which is right here. Now, obviously, we will draw out this low. We'll draw out this candle's high right over here. And we will wait for price action to give us a signal for an entry into a short or long. Now, what I'll do in this scenario is I'll stay on the hourly time frame to show you guys how we would go about trailing. And again, just like I previously did right now, we'll show you guys how we would go about trailing. So this pretty much broke to the downside. This tells us that now we're interested in shorts. We're interested in shorts. We put our stops right above this. And again, if it stops us out at this high, we want to be out immediately. The reason for that is because we want the candle to create its top wick. We will take those small losses. That is completely fine, but we will not hold on off of hopes and prayers, waiting for price to reverse. No, we want to take our position out the moment it hits stop loss, immediately. See, immediately we got stopped out, and that is completely fine. Again, we are looking for the next move and not just a random gamble. Even if it stops us, this gave us a 14-point stop. That's not a big deal. We will just wait. All right, and now we are back below the entry point right here. So now we go ahead and take our entry again into a sell with our stop losses being at that exact same high and our take profits. We don't even need to set them because we're going to use the trailing method. What the trailing method is pretty much, it tells us that, hey, when a new candle opens up, we're going to just keep trailing until we eventually get kicked out. And this can give you a huge amount of potential to actually make a very crazy RR. I have caught 1 to 20s, 1 to 30s just doing this right here. So we'll wait for this candle to close. All right, here we go. This candle closed, the next candle opened up, and we have to wait for now until this candle closes. All right. So we see that this candle closed up, and now we could move our stops to this candle's high right here. In case it breaks at 2 up, we want to be out of the trade. Right now, we're currently trending in about 57 points in profits. Should be a little bit, more because obviously we got our entries late. But we are trending 57 points in profits. And guess what? When this candle closes, we'll also move our stops. But for now, we just wait. Alrighty, and now we have broken the candle again. We can move our stops a little bit closer now to these lows right over here, or these highs. And it kicks us out right there, which gives us a positive what is this? 1 to 3 RR. This gives us still a 1 to 3 RR multiple, let's just say at this right there. This gives us a very positive RR, 1 to 3 RR. We lost a 14-point move. We caught 128 points, and that is completely normal. Now I'm going to go ahead and redo this example again, pretty much leaving my stop loss and just trailing it again after every single hourly close. So again, after each hour closes up and it gives us that candle's bottom or top wick, we could move it. Or after every 2 candles, just depending on preference. So we see right here, this candle's obviously pushing bearish. We can go ahead and go break even now. We have no worries to be going anywhere else but just break even. This candle is going to go crazy right here. All right, and now we're going to go ahead and move our stops to this candle's high. We know that this created a top wick, so now we go ahead and move this stop loss to this low right here in case it wants to kick us out. So initially our drawdown was, or our stop loss was 1,600. We are trailing to $4,040 in profits right now. If this candle decides to take us out, guess what? We lose out on potentially another like 2 or 100 points potentially right here, because we're up 100, we're trailing to 100, and we are currently up 200 points. But we will let it play out just to see how long it can go. Our goal here is to wait for a 2 up. If a candle breaks a 2 up, then that tells us that, hey, buyers are now stepping back up. We need to exit this position and reroute into a new position. Okay, and now we see that this candle even closed more bearish, so we'll go ahead and trail our stops to this candle's high. Now we have secured ourselves a nice, what is this, a 1 to 3.5 RR, and we're still currently in the trade, up $11,000, but we're still currently in this trade, waiting and waiting and waiting, because our goal is to keep trailing until we get kicked out of the trade, until the market says, hey, you know what, get out. Okay, and now we see that this candle is the one that closed up green. This gives us an indication that buyers might step back up over here. Again, the same thing we do if we go ahead and take an entry. The reason why we want to get out here is this confirms that buyers are in control. The reason why we would want to stay if this breaks to the downside is that tells us that, hey, sellers are still in control. But this so far has secured us already a 1 to 5 RR, and it can go on even more. Okay, this just confirmed exactly what I just said, which is if it breaks to the downside, we are still in sales, we are not worried, and now we trail our stops to this candle's high. We have secured ourselves a $10,000 winning day so far by just trailing our stops lower and lower to each candle's high or low. Okay, we are still in this trade right now. Since we have broken it 2 down off of this candle, we will go ahead and move our stops to this candle's high again to secure ourselves. Again, the trailing method is very powerful. You'll be shocked at how much you can make out of this. And again, right now we have already secured ourselves a 1 to 9 RR, or 1 to 10 in a scenario where we took take profit right over here. This is a 1 to 11. So we could even hold it on to even longer. As long as it keeps going in our direction, we are still in until that happens. When that happens and the candle closes us out, takes us out of the trade, we are now out, but we have secured ourselves a huge winning day, profit potential of basically what we exited, which is right over here, of a 1 to 9 RR. Again, the goal is not to be correct all the time. The goal is to capitalize and make the most possible when you are right. You don't want to be rushing into a trade, and at the same time, you don't want to have invalid stop placements because, oh, I feel like it's going to go there, or I feel like it's going to go there. The whole point of this is to go ahead and put your stops at that wick, at that area where now we are no longer interested in going to. If we come back to that high or to that low, we are no longer interested in being in that trade, because that last thing we want to do is price continues going up, we're in a short, and it continues going up, and we keep moving our stops higher and higher and higher and higher. It's just messy. It's just very messy. Not the right way to go about things, but this is the best way for you guys to know. All right, and with that, here comes the end of the video. Test the concepts for yourself and comment down below what you guys think. I'll see you guys on the next one. Peace out, everybody.